Welcome back, guys. Thank you so much for clicking on today's video. Today we're going to be doing a video about Cciv. Before I start the video, guys, please make sure to leave a like on the video below. Subscribe to the channel for more awesome content. Join the family, guys. Let's go on our investing journey together. So today we're going to be doing a video about Cciv. Is Churchill Capital stock a good buy? $23.52. My overall price prediction for Cciv by the end of the year and the end of next year. And why I think right now Churchill Capital is actually a very good buy at $23.52. I just want everybody to know that before I start the video, everything I say in my videos is not financial advice. It's just my personal opinion. So with that being said, let's get started with the video. So if you guys don't really know much about Churchill Capital Cciv, basically it started off as a blank check company. If we go to the 1 year chart here, it went public September 18th of 2020. Kind of traded sideways for a little bit, and then we see this huge, massive run up here in February. That's when there was kind of rumors that Churchill Capital was merging with the EV company known as Lucid Motors. If you guys don't know what Lucid Motors is, it's an EV company based out of California/Arizona, right? And if we know anything about the EV kind of market, it's been very explosive. It's been growing very, very quickly. And so going back to the 1 year chart, we definitely see that that's what kind of plays into the growth of Cciv, up 129%. A lot of people still wondering if it's ever going to revisit this kind of $52, $55 range. But, you know, ever since then, ever since the merger actually did get announced, we see this huge dip downward, and then we see this huge, massive run back up on March 16th. And it's kind of been trading sideways ever since, kind of on a slow decrease. And I think a lot of that has to do with the fact that the EV market did take a big correction, whether it was Tesla, NIO, XPeng, Cciv, a lot of, high growth stocks did really have a huge correction the last couple of months. A lot of them have somewhat made a decent recovery, but still kind of pretty far away from all-time highs. So let's get into Churchill Capital and let's talk about why I think right now is a very good time to be buying Churchill Capital at $23.52. So aside from everything, we know the EV market is growing very quickly, and we know the EV market is very, very explosive, and we know that the EV market is expanding in general. Now, there's a lot of EV market, a lot of EV companies that are going public right now. People definitely seeing, okay, like which one of these EV companies is definitely going to be the better pick, right? Especially with a lot of EV companies basically coming out with like rather more of an idea rather than an actual business model, like Nikola Motors, Lordstown Motors, stuff like that. There's a lot of companies that have kind of been busted for fraud, falsifying numbers, stuff like that. But I can almost tell you guys that Churchill Capital / Lucid Motors is one of the more legit EV companies that people should be buying. Like I said, it's already an established EV company, right? They already have factories, ready to go. They're going to start production. I know their production did get delayed a little bit. It was supposed to start at the first half of this year, but I believe it's going to start taking place second half of this year. And it's got a $1 billion backing by Saudi Arabia as well. So Churchill Capital, like I said, being a little bit more of an established EV company does make it a more solidified buy out there rather than a bunch of EV companies. Taking a look at the 1 month chart, it's been doing pretty well, up 22%, but the 3 month chart, it's down about 14%. And I do expect Churchill Capital to revisit these kind of prices, kind of the $50, $60 range, probably by the end of this year or even early into next year. Like I said, Churchill Capital does still have a lot of breathing room. It still has a long way to go before reaching those all-time highs. But generally speaking, Churchill Capital is a must buy at $23.52. And there's lots of reasons for that. One, their Lucid Air kind of vehicle is probably going to be a big competitor to Tesla. If there's any company that's kind of be competing with Tesla here in the United States, it's most likely going to be Lucid Motors. The Model S is obviously super popular, but as Tesla starts having more and more competition, Lucid Motors is definitely going to be bringing the heat for Tesla. Even, Churchill Capital or Lucid Motors even throwing some digs at the Tesla Model S. I do think that Lucid Motors is going to be able to compete with Tesla as far as that level alone. But even taking a look at it from a bigger perspective, there's a lot of big time institutional investors in Churchill Capital. You have like all the big banks, you have people like BlackRock who, Fidelity and all these other big time companies that are invested in Churchill Capital as well. So when there's a lot of big time institutional investors buying it and it has a 12-month projected price target of way higher than what it's trading at right now, it's almost kind of like an inclination of, maybe you should be looking into the stock, seeing what the company actually does offer altogether. And like I said, big institutional investors buying up stock of a specific stock, whether it's an EV company or a big time firm company, generally speaking, these guys have years and years of experience. So generally they have somewhat knowledge of Churchill Capital and what this company is actually going to be bringing to the table. And like I said, we're going to see the merger kind of come through soon. This will soon trade as Lucid Motors by the second half of 2021, and we're getting pretty close to that date. But the biggest thing with Churchill Capital and kind of like what people have kind of been talking about is, okay, right now it's trading way below what its projected sales are going to be over the next couple of years. They're expected to, reach $10 billion in sales by 2024, and they expect to reach $23 billion in sales in 2026. I think right now, based on those projected sales, and I know they're just projections, but basically just based on those projected sales alone, right now it's probably a good time where you should be scooping up some shares of CCIV while it's still cheap. I do expect Churchill Capital to kind of start being on a slow increase over the next couple of years. Like I said, their projected sales are $26 billion by the year of 2026, and then we see it now, that's not even close to what its overall stock price is going to be at right now. And I mean, you can always take a look at it from a bigger perspective. A lot of people aren't really bullish about Churchill Capital, but I do want people to understand that yes, I am bullish, but Churchill Capital is more of a longer term investment. People have to understand this, that this is a company that's going to be big in the next 2 to 3 to 4 or 5 years. And when it comes to investing, for me, I'm always looking about the long term. I'm always looking about what the company is going to benefit me in the next couple of years. I did the same with NEO stock as well. I started researching about NEO right when it was around $10, $11, $12 a share, and the company is doing absolutely amazing. It's going to be the same with CCIV/Lucid Motors. This company is going to be a longer term hold, and this company is going to offer a lot of long term value. So when we take a look at it from a bigger perspective and an investment perspective as well, right now is a very good time to be picking up shares because one, a lot of people are going to start buying Lucid Motors once, the ticker changes, once they start production, people are going to be scooping up shares very, very quickly. But on top of it, as well, there's a lot of big time institutional investors who see the long-term value in Churchill Capital and Lucid Motors. For me, I'm constantly adding to my position when it comes to Lucid Motors/Churchill Capital, just due to the fact that I do think that this company is going to be very successful, and I do think that's going to offer a lot of long-term value. My price prediction for Churchill Capital by the end of the year, like I said, I do see it revisiting, the kind of the $40 to $50 mark. I don't think it's going to stay in the 20s for that much longer. We did have a recent rally from Churchill Capital. If we take a look at the 1 month chart here, Churchill Capital did get as low as like $17, $18 a share at one point, and it's kind of slowly made its way back up. And I do expect Churchill Capital to continue climbing once, like I said, it starts production, once it actually starts selling vehicles. I know they're already capped out on their pre-orders as well. So the company does have a lot going for itself, which is why I think right now is a very good time to be picking up the stock at $23.52. With that being said, guys, that's all I really have to say about the video. You guys let me know down in the comments section below, guys, what you think of Churchill Capital. Do you guys think Churchill Capital is a good buy at $23.52? If you guys own Churchill Capital stock, how many shares do you guys own and what's your average? I'm always very curious to know. With that being said, guys, thank you. Have a great day.